Today, traders are less optimistic than yesterday. However, they welcome the news about the growth of the 2-year and 10-year US Treasury yield curve. The 10-year and 2-year US Treasury yields spread is again positive. So now these analysts who have forecast the collapse of the world economy, citing the inversion of yields, are looking for other signs of a recession. Sadly, there are a lot of them. The central banks are forced to soften the monetary policies due to weak macroeconomic statistics and the global inflation slowdown. Besides, market sentiment is weighed down by protectionist US trade policy and the US-China trade conflict in particular. Market participants are awaiting the confirmation of Donald Trump's comments from last week. He said that their countries might be able to reach a compromise and even sign a broader agreement. However, no further details were provided after that speech. And yesterday, Bloomberg reported that China could be aiming for another round of talks. Meanwhile, investors are refraining from active trading. Now they prefer sitting on the sidelines. The dollar-yen pace trading sideways near the 108.40 level after retreating from a 2.5 months high. Traders are also fretted about the mixed macroeconomic background. This morning they were mulling over China's inflation data. According to the report, in September, consumer prices in China grew at its fastest rate in the last 6 years, reaching 3%. The figure was in line with the People's Bank of China's estimates. However, weak data on PPI overshadowed optimism. The producer price index advanced to a 3-year low. It could signal for the negative consumer inflation outlook. Traders of the Australian dollar ignored the macroeconomic statistics from China. They were thinking over the publication of the RBA meeting minutes, hinting at another interest rate cut. The Aussie slid only by 0.3% against the US dollar, falling but to the level of 0.6765. That's all for now. We wish you profitable deals and hope you will get back to our channel in a couple of hours. See you!